Welcome to our panel discussion here to speak about fintech disruption in the B2B payment space, or I would say in the payment space more broadly speaking. So I'm Paul Roman. You can see they got our pictures up straight. We had a few mix and matches going along there for a while, but we settled that issue. So I'm the general manager for the global commercial services business for Amex in Canada, and very happy to be sort of leading this panel discussion today. And if you think of the topic, it can be looked at in a pretty broad way. So I think we're all familiar with, and we've seen downstairs, there's a multitude of services and providers that are quote unquote disrupting the payment space. And as we think about the topic and the panel today, one of the desires was to really look at it from a number of different perspectives. I think the goal is really to look at it from the pure fintech perspective in terms of the companies who are looking to either get financed or to scale or to partner or co-create and really drive their business. And then there's also the corporate angle in terms of these companies who might either be co-creating or integrating one of these services or looking to invest or partner with these services in terms of how they can make that work with their legacy business. And of course that exists, at least in Canada, in an interesting environment where there's a real concentration of financial institutions, an interesting regulatory environment that's going on that can sort of help and hinder what's going on. So if I look at this issue, personally anyways, in sort of my day-to-day life in terms of what I do at Amex, I mean, having a relationship with about 100,000 or so companies, find ourselves working either with fintechs themselves or quite often with the corporations who are looking to partner with them. And even closer to home with an Amex Ventures arm that we have that's made 50 or so odd investments over the last several years, either in areas that augment the core part of the business, whether it's underwriting or authorizations or looking to add consumer, sort of new consumer services into the realm. So as you look at from all these angles, it's definitely a big topic. So very happy to have two experts here to collaborate with in terms of having this discussion with Roy and Sue, who between them have, I would say, upwards of 40 years of experience, both from working on the business side of the equation, but also consulting more. Sorry about it's 20 years each. It's not 40 years.
No. Wait a minute.
So both on the business side and frankly consulting in the space. So in terms of kicking off, I thought Roy and Sue, maybe just introduce yourselves a little bit more. We'll start with you, Sue, a little bit about sort of your current remit and your engagement in this space.
Yeah, sure. No, it's great to be here. If I wasn't here on stage, I would actually be there because I'm very excited to hear about what Amex is doing. And so I spent 25 years in a corporate world, driving product innovation in, I would say, big fintech companies. We didn't call ourselves fintechs until the very last one, which was Finastra, where I was in charge of global innovation. And I left and started FGS, which is actually Fintech Growth Syndicate. It's a mouthful. And started that just over 3 years ago. And it was my first startup. I thought, I knew everything about creating products, and it's a very different world when you actually get out there and have to start your own company and learn the hard way what it actually takes to be a successful entrepreneur. And I've been very lucky to have built a company. We're about 30 people. And we primarily focus on accelerating innovation inside big companies. And one of our clients likes to say we're not for everybody because unlike a traditional consultancy, we do want to sort of, break down some of the big barriers that actually are, that need to be broken down in order to actually get things to work. We're not really a very good innovation theater partner. The other side of our business is we believe in partnering really strongly. We believe in not recreating stuff that's already out there. And so we just issued the Canadian Paytech report yesterday, helped the Association of, the Paytechs of Canada Association launch. We're really active in the community. We were running the Startup Lounge downstairs. and we're really interested in seeing the whole Canadian ecosystem succeed. So that's my background.
No, thank you. And Roy, same thing?
Yeah, thank you, Paul, and thanks for everyone for coming. I'm glad you're here because at 10 to 12, when there was no one in the room, I committed to Sue that at 12 o'clock there's nobody in here, we'd turn this into a karaoke contest. So
Would not be pretty.
that would not be pretty, no. So thanks everyone for coming. My name is Roy Kao. I am the managing director for Mars FinTech, which is a group under Mars and the Venture Services Group that supports, of course, our FinTech, our earlier stage and later stage startup companies. Show of hands, who knows about Mars here in the room? Oh, awesome. And who's been to Mars? Oh, good. It's surprising always to me that how sometimes in a room full of people, how few have been to Mars or seen Mars. And so our mission, of course, is to help Canadian companies, early stage, in my particular case, fintech companies, scale to achieve scaling as quickly as possible. I use a line from Ray Reddy. For those of you know, he's the founder of Ritual. I don't know how many of you use Ritual, but I recently interviewed Ray, and he used a line in our interview that stuck with me, and I'm glad he didn't trademark it because I would owe him a ton of money. But he really felt that he was this, I think, is his third startup. He was building a global business that happened to be based in Canada. And so that's how we really like to help our companies look at it. They're building, whether it's in fintech, whether it's in consumer, whether it's a retail platform, whether it's data analytics, that they're building a global business in Canada. And so that's what our mission is. And we're very fortunate to be located in the heart of Toronto with close to 5 to 6 head offices of Canadian banks, and supporting companies with partners like Fintech Growth Syndicate, among others. We call ourselves an innovation hub, and we really do sit at the center of this community or ecosystem where it's the FIs, it's the fintech, and as well, very importantly, the government and regulators as part of our conversation, for example, right now with the Department of Finance Canada on the open banking consultation process. So I'm thrilled to be here, and I'm thrilled to share our point of view along with Sue with the audience in American Express.
No, great. So Sue, I mean, maybe picking up on something that you mentioned, being with, I guess, a platform company, one of those companies that's looking to drive innovation either organically or through partnering and through investments. I mean, at FGS, in terms of partnering with all these corporations, trying to drive that innovation or help them do that, what are some of the pitfalls you're running into? Like, what really drives a lot of the energy that you have to put into those businesses?
That's such a great question. I don't think there's a single large company out there that isn't trying to or working hard at trying to figure out how to, what's coming at them and how to respond. And over the last couple of years, we've called that innovation. I think that the pace of change has made it very difficult to take the time it needs to actually get yourself set up to make innovation work. And so I think there's a couple of things. One is innovation is so difficult, both for the innovators and the organization that is running the business, that there's a huge amount of conflict that gets created, tension. IDEO calls it creative tension. It's mostly tension, and it can be a very difficult environment to be in, and it's not for heroes, and it's not for the faint of heart. And I think that it really is one of the hardest things. I think the second thing that also contributes to that is, a lack of awareness of what's really happening outside. And I don't think it's not ignorance, but it is just the sheer amount of change that's going on in Canada and globally, especially in payments, is you can't afford to take your time. Mm-hmm. And so I think that's one of the biggest challenges, is just making the changes necessary to make innovation work requires real strong leadership.
And do you find that a lot of these companies are seeking I guess, your guidance to navigate the sort of the array of solutions that are out there, or do you find that they're trying to integrate something that they've already made a leap of faith on, and they're having trouble integrating it?
I would say it's more the former, but I think that, like I said, we really are not for everyone. There's lots of great companies out there that will help big companies with innovation. Mars has a great program for companies that, want to take innovation outside or to support them inside. I think, what we actually look for companies that are set up to succeed with innovation and just need some tools and need some help to, figure out why reinvent the wheel, why not use an innovation process that's worked in another company, that kind of thing. I don't know, Roy, what you think about that question.
Now she's doing my job.
Well, I just think he would have an interesting perspective on that.
You use the term innovation theatrics. We use that term as well. And unfortunately, for a lot of organizations, what large organizations, not just the banks, but a lot of large organizations, what they face is a problem it's Newtonian physics, it's inertia. When you have a business that's been running steadily in the same direction at the same speed for decades without really disruption, it tends to build a certain level of comfort into it, and then you start focusing on things like shareholder value. You start recording record quarterly profit quarter after quarter, and really fintech. And again, to Sue's point before about how the fintech before was fintech before there was fintech. Fintech existed as long as the financial institutions have. As a child on the streets of Manhattan, the first time I saw an ATM with my father, it was a Chase Manhattan, when back then was a Chase Manhattan Bank. It was a big Diebold machine on the side of a building with very large physical keys and a black and white LCD panel. But the fact that after hours my father was able to retrieve cash out of this machine, to me, was an amazing experience, because up until it was always with the teller. So fintech has always been around, and the banks have always innovated on their own timeline. What has changed recently, and what makes it more difficult and more, I guess, conversation worthy, is the fact that the bar, and this is across all technologies, not just fintech, but a barrier of entry for companies to be potentially disruptive, particularly in a very focused manner, which is how a lot of fintech tackles these challenges, has allowed them to take on particularly prickly problem, whether it's small business lending, whether it's consumer lending or payments, that some banks perhaps are not as well prepared on focusing on, or their model does not address as well. So that has opened up opportunities for fintechs to challenge. But on the other side of the equation, the banks do have the stability and the loyalty that is so key, particularly in the Canadian marketplace compared to some other global marketplaces. I usually like to tell people that one of the biggest detriments to the Canadian fintech innovation scale has been the fact that the Canadian banks survived the 2008-2009 global financial crisis so well, because it has allowed the Canadian banks to use that as an example, and that has really brought more challenges, I think, to the Canadian fintech ecosystem. But I don't want to be doom and gloom. I mean, we have some amazing factors. We crank out in Canada over 50,000 STEM and computer science graduates a year. Whatever your viewpoint on the current geopolitical circumstances are, we are becoming the destination choice for a lot of global entrepreneurs who are choosing Canada to build their businesses and bring their innovations to Canada. We have organizations like FGS, like Mars, and many others, 111, that different financial institutions partner with and support, that'll give Canadian entrepreneurs a resource to thrive and build amazing world-scale businesses. But we can always do better.
Mm-hmm. And we've spoken a little bit about it from the corporate and the regulatory side a little bit. If you jump actually into the point of view from the fintechs themselves, And I know you're involved, I think, often as a liaison between them and getting the type of financing that they might need. How's that been evolving over the past few years in terms of whether it's access to capital or having those right connections to find the right willing partner on the corporate side to try to scale the business model?
Yeah, good question. So I would say on a, at a high level, we're doing better. If you look at us 5 years ago, we're definitely better, but we definitely have a lot that we can still learn from some truly true leaders around the world. When I was in London in February for Finovate, for example, the UK's perspective was very much 1 year into PSD2. The good thing is no one died. Everyone is still around. The banks are still thriving. The fintechs are thriving, but they were taking a much more bigger perspective on lessons learned, right? Things like fraud and things like KYC were very much front of mind, and they were really innovating on that. And it was very much a collaborative effort because both the fintechs and the banks realized that this is the new world they live in, and the fraud and KYC requirements are obstacles or challenges that can have to tackle together. We've definitely been doing better. We do some things better than others. We just had this conversation about raising capital in the Canadian perspective. I lived in New York for 9 years, so it's a very different marketplace. We're 37 million people, and so you would expect that we would be about 1/9 of the U.S. scale when it comes to raising capital, but in fact we're something like 1/17. So the population difference notwithstanding, we're still not great at converting the capital we do have, the wealth we do have, into risk capital. A few months ago, someone mentioned to me, I can't remember what the exact number is, I think several hundred billion dollars worth of wealth in Canada is locked inside GICs, right? And so, in my perfect world, if I could unlock 10% of that and deploy that as risk capital, that would be an amazing initiative to launch Canada into becoming a leader or take a more of a leading position in deploying that capital towards innovation, not just in fintech, across health, clean tech, which are other sectors that Mars support. When it comes to, we have the same talent challenges as a lot of the other places around the world, and certainly in other cities in North America. That's something that we would like to alleviate, whether it's through immigration and/or education. And as far as partnership with banks, everybody's favorite question, how's it going? The answer is, it's better, but it could be a lot better. And banks, I think the financial institution in general, and we work with financial institutions all the time as partners, we really are in of the mindset that rising tide floats all boats. We are very much the hub, so we want all stakeholders to be able to rise to the challenge, and we think the FIs have an incredibly important role given the amount of captive audience they have and the wealth and the capital they have to deploy in this space. And there definitely is a growing sentiment that they need to do better going beyond the innovation theater, but I think there remains a lot of lessons to be learned as to what that means and how to get there, and how things like perhaps compensation need to be tied more directly into innovation in order for these lines of businesses to really thrive on innovation.
Mm-hmm. And given that environment, I mean, Sue, we've talked about some of the issues in terms of from a scaling standpoint, or some of the inertia and some of the financing. But if we actually pivot to some of the actual solutions themselves, I mean, whether it's lending, foreign exchange, AI, cybersecurity, distributed ledger, are there any themes that you're finding are taking hold more, that you're running into more, that are actually starting to actually be able to scale from a business model, just in terms of that sort of application specific, or is it all over the map right
I think it's all over the map, and I can't help but, I know you've asked me a very specific question, but I want to just touch on a few things Roy said. So, we have a perspective, it's based on research and definitely not, probably not the only way to look at things, but we do tend to look at the space more from a disruptor or startup perspective. And the report we launched yesterday says that, over the last 3 years, the banks have not actually increased their activity in terms of partnering. So I think that's not because they're, necessarily willfully not doing it. I think it's because they're just so huge that trying to get anything to market still takes 2 to 3 years. And, there's been a few examples of where that's happened faster for them. Like I think Movin might have been one, but that was 3 years ago. I don't think we've heard anything really that, I know there's been some announcements this week. CIBC's launched a business product that would have been great for me 3 years ago, but I'm, so deep in now with the partners that I've found. There's just, it's too late for me. I'm not the customer that they're going after, so that's good. But I think from a fintech point of view, like, in PayTech, we have almost 700 companies in Canada that are not financial institutions, that are trying to serve the needs of either underserved or, frankly, I'm an underserved business customer. And they just can't get to market. And they're too small to necessarily, spend the money to acquire the customers. And the biggest challenge is competition. There's no competition in our market, right? And so while I totally understand the risk and the security and the trust, and like I've had my financial advisor, my bank advisor for over 20 years and trust him with anything. I can call him and email him and text him. Well, I can't actually text him, unfortunately. But, and he will respond very quickly, and I really appreciate that. But that's for one specific thing, right? I have multiple needs, and unfortunately, my bank doesn't even know that. So I think that there is so much more we need to do. And when we look at, we have 26 challenger banks in Canada now. We have, of 14 tech giants that we looked at, 12 of them are in payments in Canada. Some of them have millions of Canadians using their products. And what I worry about is those 600 odd paytechs being successful, because they also represent 80,000 jobs. And being an entrepreneur, I kind of, have a bit of a soft spot for what it's like to have to sell your house because you can't get a loan, to fund your business, can't find an investor, because try and find seed investors. It's virtually impossible unless you know people. So we need to do something, because I think our economy depends on it. And I know I'm sounding negative, but I think the alarm bells need to ring, because we've got an election coming, we've got a massive amount of regulatory change that needs to happen. And so I think, unfortunately, the all boats is only going to be those banks rising. And everyone else, I only thought of this now, might actually sink or drown. So I think that's, and I don't really mean to be so provocative, but at the same time, like, somebody has to sort of give the other side and be a big enough voice. And so Paytechs of Canada, which launched yesterday, I think that's you've got Portage, Paytm, I'm going to get in trouble. Peoples, which is part of the prepaid. Actually, Peoples is really fundamentally a huge part of the prepaid industry in Canada, which has grown massively year over year. Anyway, I'm going to stop talking because I could probably go on forever. But so I think there are there are just too many good examples to use to your original question. And the ones that do take more hold than others, like, I wouldn't be surprised if we see CIBC's news trigger more news of the same type, right? So, it was robo-advisors a couple of years ago, and, today it's small business payments. So it's really up to the banks at the moment to drive a lot of the activity.
But just picking maybe for both of you, if you think of being able to float or not, i.e. the 600 or odd that may not have the type of scale. I mean, you mentioned in terms of some of the FIs that might be the ultimate winners, even if they're moving slowly. But what about, how do you see that versus, you also touched on some of the big brand name international players. I mean, whether they're launching their own currencies, they've got big installed bases of customers, including Canada, you've got the China, you've got the Tencents of the world. Like, do you see that being, I guess, a threat, so that it may actually not be a safe, quote unquote, environment for the FIs just to keep going with the wave with all the regulatory protection around them? Or do you see more of an international play, or that it'll still be organic Canadian?
go first?
No.
Roy looks
I'll
ready.
go first. Okay. And so it's a good question. I mean, a lot of people, so I think it was Dave McKay at RBC who actually said that he's not afraid of the fintechs, he's afraid of the FANGs, right? The Facebooks, the Googles, the Amazons, and the Apples, and Apple launching
And for some reason, Netflix.
and Netflix.
That's the N in
Data.
thing.
It's a lot of data, and so Apple launching the Apple Card, for example, it's going to have, as Peter Mizik yesterday said, a long-term ripple effect on how financial service is delivered. And so I think when we look at all these things, we still are. And I've been experimenting this in some of the discussions with our fintechs, is we've been somewhat stuck in our reference point from the institutions that deliver these services, and so we call them banking services. And so one of the construct that we've been working with, particularly our fintechs, when we look at, it's how they go to market and the product market fit is, in the end, financial services is about people accessing money and putting that money to use, whether it's for investment, for savings, for spending, or for making large purchases like a home. And so those are individual models of the individual business models of how consumers, individuals, and small businesses and large commercial entities interact with money. So I think in the future, we're going to have to deconstruct some of those models into understanding how the customer delight and what delights them, what's the value to them, in order to find the financial service of the future. And so I don't have the crystal ball, otherwise I wouldn't be here, to say, well, the banks will be around and the branch banking looks exactly like the model today or the different model tomorrow. But what will change is how customer perceive whether they're getting value from their financial services, whether that value will be provided by an institution known as a bank, or potentially a fintech, or potentially a homegrown business, and whether it could be a homegrown business from Toronto, or it could rise out of the valley as a large business. But in the end, it is these channels and these channels for interaction that I think is going to affect how we perceive financial service.
Yeah, I mean, it's interesting, like you brought up the business model. So, payments, obviously, most of you are probably, more knowledgeable than I am about the payment space, because I'm assuming a lot of you live and breathe it. But, you see folks like Stack or EQ Bank or others offering no-fee solutions, because what they're doing is they're going back to the historical model for banking, which is making money on deposits. And so Victor, I think, said something yesterday. He said a few things yesterday, which were all very interesting. And it's amazing to see a bank president come out to an event like this, because I think that is what we need.
With no tie.
Without a tie.
He took off his tie.
But he made some points that I think make me worry about, our ability to actually compete with some of the bigger players. Like, because when the bigger players do eventually get here, whether it's because of regulatory change or some other strategy, whether that's Google or Apple or Amazon, Alipay, and WeChat, for instance, some numbers suggest that there's 5 million Chinese tourists and students and residents in Canada a year using those payment services, right? So that's interesting. And, if you look at Alipay or Alibaba's strategy, their strategy is actually to find as many Canadian businesses that want to do business on Tmall, which is their platform to sell to Chinese citizens, to sell Canadian products to them. So not secretly, but quietly in the background, we're all worrying about stuff, and they're going and signing up the Lululemons of the world and everybody else to make Canadian products available to Chinese citizens or who have bank accounts to purchase them. There's a lot of stuff happening behind the scenes, and I think that we are a little at risk, I think, of, there's all sorts of good reasons for our regulation, But the other thing that Victor said yesterday, which I don't agree with, is, fintechs should be as regulated as banks, but the regulations are the problem, right? It's not that they shouldn't be regulated. If you look at, 600 paytechs, probably 80% of them don't actually perform something that requires them to be regulated. They're technology services, they're AI, there are other things. The people that actually need to be regulated are few and far between. Mm-hmm. It's not that, it's the need for digital, it's the need for, a different business model, a better fee structure, I tell the story that I have still not been able to get a bank loan, a credit card, or a line of credit. My bank right now gives me a $10,000 credit card to run my business, and we're going to be about $6 million in revenue this year. And it's because I'm just over 3 years in business. The first couple of years I was, no verifiable income, even though I worked for 25 years for SimCorp and Xerox and Finastra and, you name it. I think there is some concern that we're not actually talking about the right things when it comes to the need for financial institutions to change.
I'll talk to you after about getting you that card too. So it's not a problem. Much more forward-looking on underwriting than some of our peer group.
Good pitch.
Yeah.
Can I just address that? Super has been very interesting about the regulatory issues, which is something in front of mind for everybody. Open banking or open data, however your perspective on it, certainly is seen as a large regulatory change in the Canadian perspective. And after having, and I will say this in this role in the past 2.5 years, I have gained a certain amount of appreciation and sympathy for the regulators and for folks, Maureen Jensen, Pat Chalkos, over at Launchpad, because they don't have an easy job. And the raison d'être of the regulators originally, of course, is to enforce and protect, and in their case, in protecting institutions, customers from institutions, or sometimes institutions from each other. But I think, but again, just similar to the construct of looking around how business model and it's going to change about how the Canadian financial institutions can deliver these services. I think we should also get a little more bold in looking at different constructs and how regulation could be delivered. In my role, if you looked at my LinkedIn, I was founding CTO of a fintech called Lendified. And when we were Lendified, we had a conversation because we were applying for it to be the first marketplace lender to obtain an EMD, to be an EMD. So we worked with the OSC quite closely. And one of the conversations we're having about regulatory challenges and modernization, much like something that's very necessary, much like payment modernization, is that we were starting to look at, and that sentiment is not new. I remember many years ago, 3 years ago, at one of the annual shareholder meetings, caused quite a kerfuffle when Bharat Masrani of TD had said, well, we should regulate all fintechs as well as the banks. And in the fintech space, that definitely did not sit well. But so the challenge became, well, we can't have a Wild West, and so what's the proper perspective? One of the ideas we're floating around was the idea about functional regulation. So instead of regulating it from the construct of if you're a bank or an institution or a fintech as an entity, that we will regulate around functions. If you're taking deposits, all deposit takers will have to be under this simplified set of rules, and whether you're giving financial advice or wealth management advice, that you could experiment with ideas of giving these functional regulatory framework that will be simplified so that the banks could spend less. The amount of money the institutions spend each year on compliance is astronomical. And also for the fintechs to better be able to understand it and stand themselves up without being crushed by the regulatory requirements. One of the fintechs I spoke with about 1.5 years ago, they were beside themselves because they were about to sign a deal with one of the big institutions. They were handed a binder of the legal and the compliance requirements they needed. And they went to their lawyer. Their lawyer said, this is going to cost you $30,000. And they said, but we only have $30,000 left in our bank account, so we can't all just go to that. And those are it's an oversimplification of a challenge that is that
It's not really though.
What?
It's not an oversimplification.
Oversimplification, but
It is. It's a perfect
demonstrative.
example.
Yeah,
Yes.
perfect example of,
Yeah.
of the challenges that faces the Canadian financial system in general. It's a systemic challenge, not just for the fintech, but certainly a friend of mine who was chief data officer of one of the Canadian major banks. The amount of money she told me that they spent each year on compliance and audits was phenomenal. It would be the budget of several scaling fintechs just on the compliance and the maintenance.
No, it's big. I'm gonna ask these guys one more forward-looking question, but before I do that, I wanted to poll the group out here to see if anyone had a question for Roy or Sue that they wanted to get out there before I do that.
You can't see me?
Yeah, I'll repeat the question for you.
Just one question. The digital partnerships that banks are doing with fintechs, what sectors, what areas of fintechs partner with banks or help with banks or vice versa?
So as well, for those on the other side, just what do you want to just repeat the question and then give a comment?
So go ahead.
Yeah, the question was for the partnerships that financial institutions are doing with fintechs, where are they partnering most? So
Go ahead.
no, you go.
So from our perspective, we do get this. We're fortunate to be in the front row a lot of times to see a lot of these developments, and I think the banks, what the banks are do is they do recognize some of the areas where they're weaker at. Small business lending, for example. So CIBC, quite well known, about 2 or 3 years ago signed and announced a major partnership deal with Thinking Capital, which is out of Montreal, a company we support. That is now part of our Purpose Financial. So Thinking Capital, again, a small business lender, they had a platform, and so they partner on something and small business lending has traditionally been one of the challenges for the institutions because it costs them as much to do a $100,000 loan or working capital loan as it did for $1.5 million, $2 million commercial size deal. And so they pick and choose some of the weaker areas, or high impact areas, like customer insight, TD's acquisition of Layer 6, for example, 16 months ago. Those are the areas I think that the FIs do very well is recognize where they need help, recognize where they can get the most value, and recognize where they can really differentiate themselves from other institutions and their other businesses. Agree, disagree?
I mean, there's a few lending partnerships with the big 6 banks, very big names that have actually not succeeded, and you don't see the press release about that because, the amount of time and effort that goes into those partnerships. It's interesting. I think there is startups get pushed really hard by if they want to go to an accelerator like a Techstars or whatever to make sure that they actually are doing something that customers want, and so they get that product market fit really right before anyone's going to invest in them. And I think the partnerships that we've seen, some of them have forgotten about that, and the partnerships get so watered down by the time they get implemented, and then they fail because customers don't want them. And so I think that's one point about lending. Unfortunately, I really don't think we've had a huge success in alternative lending in Canada through banks. I think we've had definitely big success with Thinking Capital and, with On Deck buying Velocity and now Lendified and others. But, Cabbage had a big announcement right when fintech was, people are still trying to figure out agree on what the definition of fintech was 3 years ago, and then they quietly left. So they're not partnered with Scotia anymore. But I think it is a bit of a smattering across the board. I can tell you what it's not, just to keep in the theme of my my message. It's not different business models, right? And that's the single hardest thing for an incumbent to figure out is how do I introduce something that could cannibalize my existing business? And there are examples out there where, we were talking about this yesterday. We've got a challenger bank Stack in the startup lounge. The challenger banks, like the Movens and Starling banks of the world, are not actually taking customers away from banks. It's not that cut and dry. They're serving the needs of people that either are just coming into the market and needing financial services, or they're in addition to what the financial institutions are providing. And that's one of the biggest tension points in Canada, is that, we don't have a lot of those alternative options. It doesn't mean we would necessarily leave our financial institutions, but my guy's Jamie, I would never leave him. But I think that's what we're not seeing enough of, is, looking at alternative business models not as the end of the existing financial institution, but as, the addition to. The bank in Mexico partnered with Amazon and launched an Amazon card, and the executives were like terrified of what would happen. 95% of the customers were net new customers to the bank. So you have 5% of existing customers decided to go after that card. So, I think we have probably somewhere in the neighborhood of 90 partnerships that the Canadian FIs have done over the last 10 years or so. And hopefully we'll see more. But most of them are tech inside as opposed to products, customer-facing products.
Yeah. Not as visible. So maybe from an optimistic standpoint, looking forward, we're sitting here together next year. If you think of the various initiatives you're either involved with or that you're following very closely, what's the, headline that you'd like to see in terms of just a real push or success or advance in what's going on in the market that you think would be a real win but over the next year, or if that's too short a time frame, looking ahead a couple of years?
Well, I think the headline would be that I would like to see, and it's actually possible because there's some people trying to do this, is a few new bank licenses issued. I think that would be one. Another would be, material progress on real-time rails that is about faster payments, but it's actually also about access. It's more about access to the fintech community than it is about fast. And open banking. I think we will see something happen in open banking. I'm optimistic, but we've also got to get that done before the election gets called. Otherwise, it won't happen.
Yeah.
So.
Yeah. And for me, I think the number one thing, just because where we sit, and I'll explain that a little bit, is open banking, because we've been part of the consultation process. We have heard rumors from various parties that there will be a report released in the next 2 to 4 weeks, depending on who you speak to. And then the minister will decide, because we're bumping up against election, and the writ won't get dropped until the summertime, whether that report gets released in public, and then that will determine the course of action. I have high hopes that whichever government that comes in, and is in power after the October election, will see the power of open banking as it applies not only to the current banking environment and allowing competitors on a more level playing field between fintech and financial institution, but also a real opportunity to open up for Canadians, and that's where the Mars perspective we're focusing on as a part of the consultation process is what it means for Canadians, and Mars is we're striving for a large improvement and leap in financial inclusion and literacy in Canada. I think for a G7 country, we still could do a much better job in that, and I think open banking, but through transparency, could provide an opportunity for consumers to really understand what it is that he or she is using, and what it means in terms of cost, and what a true rate reflected in a overdrawn fee versus a payday lending rate really is, and really make the entire Canadian financial ecosystem a stronger one through education and knowledge. And I have hopes that regardless whether a blue, green, red party or orange, that they see the power in what open banking can do, and put Canada really also on a level playing field with the global players, with the UK and also Australia, who's also ahead of us in that undertaking.
Yeah. Well, we'll test those theories a year out to see how they're successful. But look, we touched on a number of topics today. And Sudaroy, thanks very much for offering, I think, a very broad, balanced perspective, both optimistic and a dose of reality at the same time. But really enjoyed the conversation, and thanks very much to the panel. Appreciate it.
Thanks.